Dave Gresko. We are delighted to have you here on Covered and be a guest for our podcast. How are you today?
I am doing good. How are you, Vince?
Super, thanks. Here at Covered, as you know, all we do is represent corporate policyholders, but we have lots of listeners in different parts of the risk management field because, you know, we work with coverage lawyers, we work with brokers, we work with risk managers, we deal with adjusters and other, you know, folks in the space. And so I was so delighted that you were willing to come on because you've got a great background for this, right? You were a risk manager at several, got an MBA and then went into risk management at several different companies. And so we'd love to talk to you about that. But then I'm even more excited that right now you are doing what is what I think is kind of at the vanguard of risk management these days, which is kind of risk management on demand.
Correct.
And you may have a different way to characterize it, but I'd love to, if you could, our folks always sort of like to hear how people got, how their careers have evolved and how they got to where they are. So maybe if you could just tell us a little bit about that, we could start there.
Okay, I'll give you the 1-minute bio. I actually am a mechanical engineer by degree. So when I got out of college, I went to work for an oil and gas company in their projects group. And I was basically managing design and construction of offshore platforms. That job was based in Dallas. And when I was in school, I always told everybody engineering was a means to the end. It wasn't the end. So while I was in Dallas, I looked around for business schools and I ended up at SMU. Why? Because SMU's in Dallas. And so I went to SMU, got my MBA. And about that time, I moved to the chemical division of the company, Arco Chemical. And I'm still in projects, but eventually after a couple of years, I was moved into the finance organization. And then a few years after that, back into projects. But then Arco got bought by Lyondell Chemical, got back into the finance with Lyondell. And when I was in that finance organization, I did some support work for the gentleman who was the assistant treasurer for risk and insurance. And I helped him with his business interruption calculations and calculation of replacement cost values. I was able to because on the finance side, I was doing all calculation of the company's finances. So I knew how to calculate the BI stuff. And in my project engineering life, I used to have to calculate and update the cost of building our various and sundry plants. So I was doing that, and he asked me one time, hey, would you like to go to this seminar that Deloitte is putting on? It's a 2-day seminar, and it just gives you an idea of what we're doing and what we do with the information you give us. I went there, and after 2 days, I was hooked. And when I went back, I went up to him, said, Mark, I know you don't have a job right now, but if one opens, I want to apply for it. And it just so happens we were able to make things work, and I moved into risk management in 2004, and I've been there ever since. So I was the risk and insurance manager for Lyondell and then Lyondell-Basell. Then I moved over to Dynegy, and I was the director of risk management for Dynegy. And then finally, I ended up at Noble Energy. And when Noble got bought by Chevron, we mutually agreed to part ways, and I started my risk management consulting company.
Well, let's talk about that. Go ahead.
I was going to say, one of the things I noticed working for Noble, we dealt with a lot of big companies, we dealt with a lot of small companies, and I noticed smaller companies, especially I dealt with a lot of midstream companies, small midstream companies. They didn't have a risk and insurance department, or even a person. It was typically assigned to the treasurer, the chief accounting officer, someone in accounting, sometimes even someone in legal, but they didn't have a background in risk and insurance. And I'd be asked questions, and I would just kind of scratch my head going, these guys really need some help. And I had one instance where the contact at a small midstream company called me and said, hey, can I ask you some questions about property insurance? And I said, sure. And he started asking questions. And I told him, I says, well, I can give you a very general answer, but I'm not your risk manager. And actually, we're counterparties.
Right.
So I can't tell you what to do because I might tell you to do something that's actually advantageous to Noble.
Right.
So, but I gave him some answers. But that kind of just convinced me that there are small companies out there that need risk management expertise, but they don't need a full-time risk manager.
Right.
And so that's how I got into the consulting gig.
Well, that's really, I mean, that's really interesting to hear. And I'm seeing this more and more. I feel like this is kind of a new development. Maybe it's been around for a while and I just didn't run into it much, but I have seen some sort of consulting firms that do this on a larger basis, but not on an individualized one. And I think that's really great. And I know some lawyers who have kind of been doing this, like, general counsel on demand sort of things, like where a company might need 1 day a week. And so every Tuesday, right, they go and work at that company and they have meetings, with the management team. And then they have, a couple hours of office hours. Anybody in the company can come by and say, hey, can you look at this contract, or what should we do about this, or whatever? And they kind of, just sort of manage the whole thing. And then if there's more follow-up work, then they sort of figure that out too. But no, is that what you're doing? Do you have sort of a stable of regular clients that you do is sort of a set amount of work for, or is it sort of more on demand than that?
It's more on demand than that.
Huh. Okay.
I'll get hired. I'll get hired. They'll come in and say, can you help us with this? I'll start working with them on that. Then they might come back and say, hey, when you get done with that, can we look at this too? And I'll just keep going. And when all that work is finished, then we just I just step aside. That's the purpose of being an on-demand risk manager, is if you've got questions, give me a call. If you don't need me, I go away. I charge my time to someone else.
Yeah, no, that's great. So now I assume that you're helping clients with things like placing coverage and renewals as well as claims. I mean, you're doing both sides of the house?
Yep.
Wow. Which one do you think?
I was going to say, basically, I do everything that a risk manager would do. So, yeah, it's working with the brokers and the client into how to structure their insurance, placing the insurance. I'm there for claims. Fortunately, we haven't had any claims yet come up. So that's knock good. On wood, that's expertise that you don't want to use very often.
Sure.
And I just, one of the things too is the clients I work with aren't very sophisticated when it comes to insurance. So they don't know what's going on in the market. And I try to take a little bit of time to educate them about, this is what this policy will cover. This is what this policy will cover. This is how the market conditions are right now. Because when I was at Noble, I had all of my companies, one of the things I felt that was important was you had to manage executive expectations. So in a very hard market that we're in right now, you want everybody to understand that, hey, it's going to cost more to get insurance this year than it did last year.
Right.
So, when you're budgeting, factor that in. A lot of times the executives will say, well, how come we can't just renew as expiring? Because that's not what the market, that's for the same reason why a refiner will say, how come I can't buy oil at $50 a barrel? Because it's $95 a barrel right now. That's why you can't buy it at $50 a barrel.
Right.
So a lot of it is managing expectations. But I basically try to work them through their programs, work with the brokers. For a couple companies, I've actually worked with them in like a broker selection. I did that at several companies. So I help them through figuring out what insurance broker they want to use. And then we go from there.
Now, tell me about the brokers. Are you working with some of the same brokers you used to work with when you were at Noble and Lyondell and these, Dynegy?
Yep.
Yeah. And so they're like, Dave, good to see you, man. Are they, how do they react to the risk management on demand? I mean, I have to think that they think this is great too, right? Because it's another way for them to interact with, a company on a level that maybe they didn't have before. Is that the right sense?
I actually have gotten a number of my jobs through recommendations from the brokers I worked with. So they all know what I'm doing, and they've given me some names to call.
Sure.
That, when they know that there's people, they give my name to other people. And I've been fortunate too, because I still have a lot of friends within the risk management community.
Right.
And I get contacts from them too. That, hey, I heard so-and-so is looking for someone. Can I give him your name? So I'm fortunate in that the broking community and just the rest of the risk management community is actually, for all intents and purposes, are kind of like my sales force or my business development group.
Right. And, we get opportunities to work with, lots of folks through those, channels as well. And we're both sending referrals and receiving them. And it's because, it's a pretty tight knit group. It's pretty collegial, right? We all like to try and solve problems together. And so I'm not at all surprised to hear that. But it's delightful. And I do see you at RIMS meetings and things like that. And so I think that level of it, it's another reason, one of the things when I talk to our younger folks around here, I'm like, look, figure out whatever it is that you like and go find a way to get involved with others outside, your normal network. And that's the kind of stuff, that's how you learn things. It's how you get to know folks. And that's just a hugely important part of this business. So it's really great to hear that is, continuing to be a way for you to find new things to work on. That's cool.
Yeah. And one of the things too, with the brokers, I know a lot of the small companies are thinking, well, I'll just use my broker as the risk manager. And I guess up to a certain point you can do that.
Yeah.
But there's certain things that brokers can't do for their clients because it generates a conflict of interest. So yep. I actually step in. I'm not broking. I'm not placing insurance, so I'm not competing with them there. I'm filling in a gap that technically they can't do because that there's a exposure there.
Yeah, and that's really a hugely important point too, right? And we try and we have the same conversations with our clients. And look, we don't sell policies either, right? So if clients come to us and they're like, "Well, is this a good premium?" I'm like, "Look, I know that's a broker question. I can tell you our experience is, we're seeing this, and this, but brokers are going to have, the up-to-date day-to-day information on, pricing and limits and terms and things like that. But we can help you with the legal side, right? And so we know where our job, begins and ends, and we know where the broking job begins and ends. We know where, the risk management job begins and ends. And there is some overlap, in those functions, but there are very clearly parts of it that are uniquely suited to just one of this, sets of expertise, right? Whether it's because of licensing requirements, right? Like lawyers, you need a law license to practice law, right? You need you need an agent license to sell policies, and so and you need a CPA license to quantify certain losses and things like that. So well, I should say that to do certain accounting functions. That's a better way to say it. So anyway, we're very sensitive to those things, and I'm glad you're seeing that too. And I think that's one of the things that what we run into a lot is we have to just kind of constantly be mindful of who's the best person to be doing this particular job in front of us right now. And part of it is again is expertise and skill sets. The other part of it is just from a licensure standpoint of who can and should be doing various things. So I'm glad to see you're kind of running into those same issues we run into, and it's just something you got to manage your way through.
Right.
Yeah, good. Well, what are you seeing? One of the other things our audience always loves to hear is kind of what's coming ahead, right? So, what are you seeing these days that you think? A lot of people were focused on cyber, right? A lot of people were focused on pandemic the last couple of years. We're getting a lot of it is cyber related, but sort of the softer, cyber stuff, things like, social engineering fraud, where, you sort of call somebody and say, hey, can you send some money or whatever? And it looks like it comes from, the CEO and it doesn't. But what are your clients focused on? If you had two or three things that you're hearing from one client after another, what's on their radar?
Well, I'll break it into a couple of different areas. The first thing they focus on is cost. And like I mentioned earlier, when you're in a hard market, you have a difficult time being able to manage costs to the extent you want them to. And what I've told them is, I says, well, if you don't want to pay any more in insurance, you got a couple of options. You can buy less limit, or you can reduce your coverage. And a lot of times you get hem and haw that, oh, well, I don't know if we want to do that. Well, if that's the case, and I'm not one, that we always joke risk managers tend to be very doom and gloom. So we're a little reticent to say, oh, yeah, cut limit, because you can always get it back at some other point. You can't make that jump to light speed. So
right.
they're focused on course. But I would say this number one, and this really picked up probably 18 months, 2 years ago, is as you mentioned, cyber. Everybody is looking, I need to buy cyber. I need to buy cyber. And the issue you got is there's probably a lot of credence to that, because big companies, they have the IT staff and the expertise to be able to kind of contain the company's exposure to cyber attacks. But you get smaller guys, right. They don't, again, their IT department is one guy, and he's really there to make sure your laptop works.
Right.
So they're very focused on cyber. And the question there is, what coverage do you need? Property policies, they typically will exclude certain events if it can be tied back to cyber. You've got business interruption, and then the thing we started seeing, especially with like the Colonial Pipeline, where they get a ransomware attack and their systems get shut down, and they don't have anything in place to be able to deal with that. They can't make money, but they don't have an insurance policy that can kick in to try to help cover the gap. So they're very focused on cyber right now. And all you hear about, even with the stuff that's going on in Europe, is cyber attacks are coming.
Right.
And what you're seeing now is that side of the insurance market is maturing. 6 or 7 years ago, we used to get approached by companies for cyber, and we would tell them, okay, so if we want to buy cyber for property damage, how much in limit can we get? Well, we can give you $50 million in limit, which doesn't do you a heck of a lot of good when your platform is $1.2 billion. So there's really no reason to buy a $50 million cyber liability or cyber policy for property damage, because it just doesn't, there's no bang for your buck. But the markets are maturing now, and they can cover a lot more than they used to be able to. You mentioned social engineering.
Yeah, go ahead and talk about that a little bit.
Yeah, so you ran into instances, or you heard of instances where, as you mentioned, someone would send an email and it would look like it's from the CFO, who says, hey, we've got to send a check, $10 million to so-and-so within the next 2 hours. I've talked to the CEO. He's approved it. And so just let me know when it's done. And some dutiful guy in cash management would say, oh, well, the CFO's telling me to send a check. Boom, it's gone. And then you find out later on, it was a phishing email. You fell for it, and now you're out $10 million.
Right.
So when I talk to a lot of my clients, I tell them, hey, you need to look at commercial crime insurance. You need to focus on the social engineering, because what you'll tend to find is it's the smaller guys that tend to get hacked. You might hear about the big ones. If someone hacks or tries to hack Citibank or JP Morgan, you hear about that. But if, Smith Midstream, no one hears about, but they're the ones that tend to be impacted the worst.
Right. And that's a tough thing. I mean, it really is tough. And we hear the same things from clients of, well, look, they want me to pay $1 million for $10 million in limits. That just doesn't make any sense to me, right? I mean, it just seems really expensive without much, benefit to it. And that kind of thing. And then we are hearing from some other clients about, starting to, try and find new ways to sort of deal with these things. That's something I think we're seeing more and more of people. And this happens in every hard market, right? I mean, the market was hardening before COVID, and then after COVID hit, it just sort of sent it stratospheric, right? And it started with D&O rates were starting to go up, right? And then everything went up, after COVID hit. And so we're starting to see clients go back and say, look, there's got to be a better way. What can we do? And we're hearing things about, people wanting to start up captives and risk retention, groups and things like that. Are you seeing a return to alternative, risk management approaches, or are you not seeing a rise in that yet?
You are seeing a rise in companies that don't have them looking at setting up captives, because one of the things the captive can do is it can plug gaps in your program, and a captive can access the reinsurance markets that you might not necessarily be able to get to if you don't have a captive. The other thing you're starting to see, and even when I was at Noble, we were looking at, is we had a captive in Bermuda and a Texas-based captive, and we were looking at what stuff could we pull into the captive and run through there to save money.
Right.
Again, you want to exercise the captive to the greatest degree to get the most financial benefit for your company. And I ran a captive exercise for one of my clients, and we came to the conclusion from a financial standpoint that, it saves money, but it doesn't save enough money at this point to justify all the administrative rigmarole you got to go through to run the captive.
Right.
So, there's always two sides of the equation. It's, the captive is used to improve your insurance program. But on the flip side, there's administrative work that has to be done to run the captive. And again, small companies, they don't have the people to run their insurance program. They sure don't have the people to run the captives.
Yeah, now I'm glad you mentioned that too. I mean, and that's been our experience. I mean, we've got some clients that use captive for a very particular thing, right? So we've worked with large healthcare organizations that had a captive for their professional liability claims, right? And everything went, through there. But then, I worked with one national retailer, big box retailer, and they started with a captive for their comp claims. People moving boxes at a warehouse and, hurt their backs and, that kind of thing. Right. And then they started using more and more stuff to, then it was, some healthcare expenses and things like that went through their captive stop loss kind of programs, those kinds of things. And then, and then it turned into more and more things. And basically they just, they tried to, for every aspect of, over the course of time, pretty much every aspect of their business that they, had an insurance solution to, they asked, can we run this through our captive, and should we run this through our captive? And some of it didn't make sense, and so we didn't do it, but a lot of it did. Right. And they just loved it. Now, I also have heard because you're right, there is some level of administrative burden of setting it up and, maintaining it and compliance issues and things like that. And you have to satisfy your auditors, and you've got to satisfy some regulators and, some other, there are some other aspects of it. But I have heard, some brokers are putting together kind of captive programs where you kind of have a cell in a captive. And I think that's an interesting solution. Have you been, helping clients work through any of that?
Yeah. When we were looking at this one particular company to look at a captive, you're right. There's a lot of different options you have as to what type of captive do you want to set up. You get a single parent captive where it's basically the company owns it. You can get a captive that basically, you're right, you own a piece of the captive that's been set up by one of the brokers. And it basically functions just like a captive, but the broker handles all the administrative work, the headache for it.
Right.
There's pros and cons to doing both. So, and that's what you got to do. You got to look at, for a particular company, does it make sense using a protected cell captive, which is exactly what it is. It's the broker setup captive that you just own a piece of, or do you want a single parent?
Yeah. Well, that's interesting, Dave. I'm glad to hear you're, working through very complicated issues. Anything that you can tell, as you look back at sort of how you got, into this space, and then what you've done since you've been here, and kind of what you're doing now with your new role, any, sort of guidance for younger folks of, hey, this really worked for me, or I wish I'd done this sooner, anything along those lines that you might want to pass on to the next generation?
I would say that you should always keep your options open. A lot of companies, when they're trying to fill risk management roles, they tend to want to, I'll get into the politically incorrect territory. They tend to want to focus on the younger people.
Sure.
Because they want to hire someone who's going to be there for 20 years. But when you get into, you get to a point where you say, you know what, I still like what I'm doing, but I don't know if I want to do it 40 hours a week. And so in consulting, rather than, you don't really want to hire the young person, you want to hire the person with all the experience, because they've seen so many things that when you're acting as a consultant to a client, something pops up, you go, yep, I've seen that before. Here's how I would recommend you handle that. So
right.
The worst thing that a company can do is hire a consultant who says, I have no idea what you should do right now.
Right.
Because that's why they didn't hire you to tell them I don't know.
Right.
They hired you to lay out a path or a couple of paths that they should consider and say, here's your choices.
Because they didn't know.
And I tell them as a consultant, I'm not going to make the decision for you. That's not my job. But here's options you have. Here's the pros and cons. And if they, I kind of help them make the decision.
Huh. Okay. Well, I think that's sound advice. I mean, and I'm with you. Clients, they come to us because they are looking for help, right? And, you need to give them answers and guidance and recommendation of, look, here are the four options we have. And, we think you can knock these two out pretty quickly because, one reason or another. And then that leaves these other two options. And, between these two, we kind of lean towards this one. And here's why, right? And then let the client make the decision. I don't know. Did you see the movie Argo?
Yep.
I don't know if you saw. Yeah, it had maybe the best 30 seconds that's ever been captured on film. They're trying to figure out how to get the hostages out of Iran, and they've come up with a bunch of different plans, and they finally settle on we're gonna stage a fake movie, and say that these people are part of our film crew, and. So they go and get approval for this, and they're talking to their bosses and in the government, and they say, well, this is our plan. And the guy's like, this is your plan? And he's like, yes. Look, there are only bad options, and it's a question of picking, among them, right? And
right.
And then they're like, what about that option? Yeah, that won't work. Here's why. And what about this option? Yeah, that doesn't work. Here's why. But this is why we like this option. He said, look. And then they ask him, they're like, you don't have a better bad idea than that? He said, no, sir, this is the best bad idea we have by far. And I mean, it is just, but some days that's the world we live in. Right. And
that is correct.
But you still have to find some way to manage through it. Right. And
that's exactly right. That's exactly right.
That's the tough. So I have that clip. I send it to people, when I have these conversations, and, a little while longer, they come back and say, yep, I get it. So that's interesting. I love that clip. That's a good one. All right, Dave. Well, listen, we really appreciate your time today. Any last thoughts, questions that you have for us or our audience or anything like that?
Not that I can think.
Well, good. Well, here's the deal. So coming on to our podcast gets you a bevy of rewards. I mean, we have a special covered, umbrella we'll get you for our speakers. But it also comes with lunch. So if you can send me a couple of dates when you got a free spot, I will buy you a very nice lunch somewhere. And I look forward to catching up with you soon. But thank you for your time today. I think this has been really great. I think it's going to be useful for our listeners. And we're just delighted to, have something else we can share with them. So thank you, sir.
Thanks, Vince. And I look forward to lunch.